Hello, investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. This is a 1-year daily candle chart of the S&P 500 ETF, ticker symbol SPY, also known as the spiders. And as I do each and every week, I've left my lines on the chart so you can see how the forecast worked out. And in this case, you can see here that I said the market would move down towards this level of support right here, which is that horizontal line. That's also known as a role reversal support level. And then I said we would bounce off of that line. And lo and behold, that's exactly what happened in the market. We came down, and on Wednesday, we had a little bit of a scare as news came out of Washington and investors got really spooked there. And then the following 2 days, Thursday and Friday, we bounced, and now we're within pennies of my target price right here. Now for next week, I think that we could go just a little bit higher, but don't be fooled. I'm not recommending that we go full-fledged long positions into a major bull market here. I'm just saying that there's a gap right here. I'm going to draw a horizontal line to that gap. That gap will most likely fill. 80% of the time gaps fill, and I think we will go up to fill that gap. But once the gap fills, there's now an 80% chance that the market will drop from that point. If you'd like to learn more about gaps, you can go to our video library, and I have some educational videos there that will help you with regard to understanding gaps and how they work. That 80% rule is something that I teach around the world, and investors find that to be a very reliable way of picking price targets and also using that to establish risk points as well. So very, very reliable in gaps. Now, this is a resistance point up here, and I'm going to draw that for you because that resistance high is one that we ran right into on Tuesday. And so even if we break out of this gap fill resistance, I think that resistance up there will hold. Okay, so that's for the spiders. Now if you look at the diamonds, I had a little bit of a different forecast on that. I said that early in the week, and if you review the video, you'll see that I was very specific. I said Monday and Tuesday we will probably rally, and that's what I put right there. I put a diagonal line. Remember, this was last Friday right there, and I said Monday and Tuesday will most likely rally to test that resistance, and I drew that horizontal line. And Monday and Tuesday, again, like clockwork, we came right up to that line, and then we gapped down, and just like the S&P, we started a little bit of a recovery here. So the gap down here has filled. You see that? 80% of the time it fills, and then after it fills, 80% of the time it reverses. So that's what we saw on Thursday and Friday. So now I'm going to erase all lines once again so I could draw fresh lines for next week's forecast. And again, I said that this is going to act as a support level. I think that we will move up to fill that gap right there. That's my target price. The end of this line is my target price. But I do believe that this resistance is going to hold. So we are more or less stuck in a trading channel, and that is a short-term trader's dream, is to be able to trade within a range like that. But for the investors, it's going to be quite confusing because we're not in a long-term bull market. We're hitting our head against resistance, and there's topping patterns that are starting to form. So investors are getting a little unsure of what to do, and I believe that we'll see some money moving to the sidelines until they figure it out. Now if we look at the Qs, that's the NASDAQ market, also known as the power shares. I drew my lines, pretty simple. I said that we would move up Monday and Tuesday, and then we would roll over and go lower, and here we are. Monday and Tuesday we went up, there's my forecast, and then on Tuesday we came right back down. On Thursday, the high was right at my target price exactly. And today, Friday, we closed very close within pennies of my target price. So there you go. another 100% accurate forecast in the market, and I hope you're really enjoying this. You know, my goal is to teach you how to do this so that you can become very efficient at forecasting yourself and increasing the probability of making money. Now again, what does this mean for next week? Well, there's a very small gap right here. So I think that the NASDAQ will move up to fill that gap, and then I think we're going to pull right back down from that gap resistance. So I'm going to leave that in place as my forecast for next week. And I hope you're tracking this each and every week, because I record these, I put them out to the public, we archive them for evidence and showing everyone how accurate charts are, especially candle charts. And I just, for the life of me, I can't understand why more people are not using this tool as a forecasting tool, not just as a risk management tool, but the ability to forecast the markets is pretty incredible. Okay, now, finally, if we look at the Russell 2000, this is a more broad-based index. I said Monday and Tuesday we would go up, and we did that Monday and Tuesday, and we came right to my target price. Again, is the high on Monday is where we hit the target price right here, then we came back down. So just like the other markets, we rallied Monday and Tuesday, came back down on Wednesday, and had a little bit of a bounce on Thursday and Friday. So what I think we're going to see here is we have a support level down here where you can see the common lows are right in this range, right around 1352. And so I think we're going to continue to bounce, and I think that the 20 period moving average, this is the blue line, I think that will be our next resistance point, because the 20 period moving average, once broken, then turns and reverses the roll to resistance. Let me just straighten that out for you so we have a good line and a reference point for next week. So that's my forecast, is that we're going to move right back up to that 20 period moving average, and then we'll pull back from there. Now finally, the VIX. This is something that 2 weeks ago I pointed out, and I pointed this gap out right here, and I said I would stake my reputation on that gap filling. And then last weekend I said the same thing, that gap, there's a high probability that that gap will fill, and look what happened. Perfectly, the market moved right up to that gap, and then once the gap was filled, remember the rule now, 80% of the time after the gap fills, the price reverses. So the gap fills here on Wednesday. Thursday tried to go a little bit higher but came right back down, and Friday it reversed, just like clockwork. Now, what does that mean for the VIX moving forward? Well, if you take a look down below the price here, we have a gap once again. And so I believe that the gap will fill, and I will stake my reputation on this one again, because that's how sure I am of gaps filling on the VIX. They fill 100% of the time because it's an oscillating indicator. It's not a stock. So I think that the gap will fill. The VIX will come down to fill that gap. Now, let me hit the pause button here, because if the VIX goes down to fill that gap, the markets will rally, especially the S&P. But then once that gap fills, I think the VIX is going to bounce. And that would mean lower prices ultimately for the S&P and the general market. So this is, again, how we teach. We just give you the pictures. We show you the repetition and the success week after week after week. And that gap now is going to be our target. So remember, the VIX is an oscillating indicator that works inversely to the S&P. So once that gap fills, we'll see a short-term rally in the general markets, and then when it starts to move back up, we'll see a sell-off once again. So that's one of the main reasons you keep the VIX on a watch list, is because it's the best leading indicator you could find, and it's a great risk management tool. Now, this coming Monday, we have our Q&A open house. It's open to the general public, where I will analyze stocks live, and I'll answer questions from the audience. So you could submit your stock symbols and ask me questions on Monday at 8 p.m. If you'd like to participate in that, it's free. Go to themarketguys.com, scroll down right here, right below our registration link right there, and you'll see register for open house Q&A, and that link will bring you to the registration page. Just click on that, fill out the information, and your seat will be reserved. It's pretty simple to do. It's a lot of fun. I look forward to this each and every month to connect with the audience and answer questions, and I think you'll get a lot out of it. So have a great weekend, and hopefully I'll speak with you again on Monday. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.